This meeting is being recorded.
All right, folks, we have a CPI print coming out in a couple of days, and I just wanted to be on record saying that I am particularly nervous. I am particularly nervous about headline inflation. For the last 3 or 4 months, I've been saying, hey, headlines going down. It's easy to see. CPI is sticky. I am unfortunately very nervous about headline inflation disappointing and potentially going up. Again, the last read was 6.5. Even if it goes to 6.6, that breaks the trend. That freaks the Fed out. And why am I concerned about this? Because I look at the commodities market as a very much leading indicator. I don't like what I see in oil, in gas, and now lumber's joined the party. It seems to be all going the wrong way. So I wanted to have a conversation with Taylor and say, are my concerns justified? What's going on? Do you think the trend—
No, they're not. They're not justified.
Oh, good. Oh, good. I feel better. I'm just too concerned. That's okay.
No. So I will take the other side of this. And I totally agree with you that commodities have traditionally been a phenomenal leading economic indicator, and the market can foresee where supply, demand, et cetera, is going. And obviously we've seen a massive movement in lumber on the downside with the movement in mortgage rates that we've seen. But recently it's reverted back up. And I don't think that is a massive demand shift. I think that is a short squeeze that's playing out.
Sure. Okay.
So yes, that affects things, but I think realistically, when you're thinking about the fundamentals of where supply and demand are driving things, that's where I get concerned with inflation. I don't get concerned with commodity caused inflation because short-term short squeeze yanks the prices higher. I really, full disclosure, can't figure out why oil is doing what it's doing. If you look at the economic data, any way you want to cut it, the world is slowing in general.
Right.
And the pace is getting more rapid, at least here domestically, in the data that we're looking at. And yet at the same time, you see oil prices continue to kind of settle in and even revert back upwards just recently here. So I haven't been able to get my head really wrapped around that one. I think that's probably not long lived. We'll see if I'm right or wrong there.
Yeah. And again, one of the reasons I'm concerned, and let me be very clear, I want to be wrong. I want this concern
Yeah,
to be
I want
unjustified.
you to be wrong as well.
Yeah. I want to be wrong, right? I want the Fed to be winning. I want us to get through this. I think again, I even think a flat month, like 6.5 to 6.5 headline is bad because it just breaks the trend.
Right, the trend. It's got to continue downwards. I'm 100% with you on that. For the market to be, we've had a really nice rally. We've had a really nice rally. What is it? Call it 7%, something from the more recent lows that we've seen. If you look back to the lows of October, we're up about 10% right now. And after today, probably 11 or 12%, honestly. And a lot of that is predicated on exactly what we're talking about, inflation being in the rearview mirror in the market's mind.
Yeah, the market is clearly saying the Fed is winning, which you and I have spoken about for months now. They're catching on. And they're also saying the Fed's almost done, right? We got a 25 basis point move on February 1st. Is the Fed done? There's talk now of a pause. Who knows where we go? But again, I've always known once we get to the terminal rate, the market's going to be off to the races because it's always a forward-looking indicator, right? So,
right. Yeah. Right now, it looks like we have between 1 and 2 more expected rate hikes, somewhere between that. And they don't know exactly. The market hasn't, fully grabbed onto one of those two camps. But it seems like we're almost done with this thing when it comes to the rate hike, at least if the market's expectations are right. And I tend to think they are. Yeah.
I do think we get one more in the middle of March and then they'll be done. That's always been my position. Why change now? You've heard me say this for 6 months.
Right.
So I see no reason to change at this point.
Yep.
And they're going to tell us this is the last little squeeze. This is just to make sure it's a double check. I can already hear him talk. But yeah, and it's also funny to talk about the February 1st rate hike because if you go back in time, there was a time where it was 50-50 if it was going to be a quarter or a half.
Right.
And right up until the event, I think one of the last readings I saw actually had I think it was like 66% quarter and 34% pause, right? And
right.
0.50.
So total shift. Yeah, exactly.
Total shift. So it's really wild to watch. So again, I want to be wrong on inflation. I just kind of, and again, one of the things that we talked about, I think it was 4 months ago, is commodities are sure a leading indicator, but they're often a month ahead, right? So maybe my concern, I just look at that gas number. Gas is up. And if you go back and look at the last two CPI headlines, gas was down. It was 20% of the poll or whatever it was.
Right.
I'm just nervous, and maybe I shouldn't be.
It's frustrating. The gas price is frustrating. That is always the one that people are going to hang their hat on, right? For a while, it was eggs, and eggs were off to the races, and that was frustrating because the avian bird flu that was playing out. But yeah, I think when you look at things in totality and big macroeconomic data like industrial production, you're seeing a pretty meaningful slowdown. If you look back to November and December, November, it was at 5%. December was at 1.6%. Like that's a really meaningful drop off. And then when you look at February of 2022, which is the comp, right? For what we'll be basing things off of here, it was plus 7%, 6.9%. So now the comp is really tough. And it wouldn't be unlikely at all for us to see negative growth in industrial production for the month of February, which would be, again, an economic indicator that says inflation slowing. So again, I'm a little bit opposed to you on this one, and I hope I'm right, and you hope I'm right.
Yeah, absolutely. Yeah. Yeah. I'm just looking for things that could trip us up.
Yeah.
And I'm concerned that the February CPI number might be one of those left hooks that go, gotcha.
Oh, that's absolutely a tail risk that needs to be made aware of. When you're thinking about portfolio construction in general, you have to think of these kind of outlier type of, and not saying that, this would be a massive outlier type event, but this would be an unexpected event and a tail risk to a portfolio in general. And you have to prepare for stuff like that. If you're not, building a well risk adjusted portfolio.
Yeah. So I guess to kind of wrap this up, I think you've hit it, but I just want to hit it again. You're really seeing in the numbers, because you have access to numbers and reports that most of us could only dream of. It really does look like we're slowing down across the board. Is that fair to say?
It does. Yeah, I certainly think it does. Especially here in the States. Europe is kind of another question where this mild winter has served them phenomenally well. Like it couldn't have been any better time than it's been, this warm temperature in the winter, because they shut down over 80% of their gas imports from Russia. So they needed that warm winter to be able to, survive without ridiculous levels of inflation. And they've done that. So we'll see whether they can, really truly navigate a recession or stay out of a recession. I think that's probably a little overstated to think they're going to stay out of a recession, but we'll see. Yeah. I guess in general, shut up, Taylor.
And then when you look at, and then when you look at China reopening, obviously it's been some fits and starts, but I would think zero COVID is officially dead. I don't see any reason the Chinese consumer is not like the American consumer, where when we felt it was time to get out, we got on airplanes, we did this, we did that. We had some revenge buying. Yeah,
the Chinese are travelers. They are. They've shown that historically. They love to travel. They have a tendency to travel a lot. So yeah, that's the other side of the equation. That's something that could drive up inflation based on demand coming out of the largest Well, I don't know if there's still a larger population than India.
I think
India surpassed them. I think I saw that recently. Yeah. So anyway, the second largest population in the world, if they get out and about and demand starts to increase, that absolutely could drive some inflationary pressure.
Yeah. So at the end of the day, I just wanted to talk about this because, again, it's a tail risk. I agree with you. I'm uneasy about this one. It's
keep me up at night.
It is. And very few little things kind of concern me, but this is like, wow, I think the market is so set up that even a flat month is going to, trip us all up.
I don't disagree with that thought process at all.
Okay. Oh, Taylor, you're a 10-year Wall Street vet, and that is why you are here. Where can people follow you? Because you put out daily content that really helps the average Joe.
Yeah, thanks so much. Follow us at Life Goal Investments on Instagram. So it's at Life Goal Investments, plural. There is a fake account that doesn't have the S in the end, so watch out for a scammer.
Scam accounts at one rental at a time. Well, they always spell my name wrong somewhere. The most common one is 2 L's because people don't see it. So watch for the scam accounts. Taylor, thank you so much.
Appreciate you.